Let's take a deep dive into Walmart and analyze their stock and see what's going on. So first of all, if we just look at the beginning here, we can see their net sales growing, 6 million from 2020 to 2021. A nice increase, steady increase, and membership and other income almost doubling. Now this would get me pretty excited when you see this type of growth. The only problem I have here is it's such a small figure in terms of the grand company. I know it's $1 billion, right, from 1 billion to 1.3 billion, but nevertheless, I'm not convinced that this is going to grow. So if you know somehow that Walmart is really growing their membership and other income, I assume primarily membership income, that would be really useful. Leave a comment below. And of course, if you like these, let me know. And anyway, operating income, though, as much as we're seeing, a $5 billion increase, it's pretty steady. It's at 5.7 billion last year and this year for this quarter. When you're looking at the 9 months, though, you are seeing a 3 billion increase from 17 to 20. So that's kind of nice. Something to keep note of. What's the grand scheme of things? So maybe it was growing in other quarters. This quarter, it's kind of the same as it was last year. Now, income before taxes last year, nevertheless, was 7 billion. This time, it's about 4.1. So what's happening if the operating income's the same? Well, they lost on the extinguishment of debt. Pretty much they paid off some debt early. To me, that's actually a good thing. And of course, provision for income taxes, though, went from 2 billion to 1 billion, right? Because they pretty much had half as much income, or half as much, income before taxes, I should say. And so, pretty much their income taxes, I suppose, were cut in half. That's the way I'm just going to look at it pretty simply. And so the consolidated net income at the end of the day was 5.2 billion, down to 3.1 billion when you calculate all the differences. So, in the grand scheme of things, I actually think as much as their consolidated net income is going down, right? And so that could be alarming on one hand. The major reason is because they're paying off debt. And to me, that's great. I don't mind them paying off debt, especially when it's high interest debt, which they mention later on in their 10Q, sorry. Okay, so let's go forward, especially since the only thing I would say actually that does bother me a little bit is that the operating income is stagnant, even though their net sales is going up, even though their membership income is going up. And that's really because the cost of sales and the general and administrative expenses are also going up in line with those other issues, with those other gains, I should say. So what's going on here? Now, if we look at a chart for the past about 10 years, you can see that revenue has steadily been increasing. That's great. However, cost of goods sold almost looks like it's the exact same chart. You can take a look back, and it's also increasing. So you're kind of seeing this curve where as much as Walmart's doing better and better and better, yet their cost of goods sold is still steadily increasing. Now, their operating income, keep in mind that this is only just a general move from 27 million to 21 million. It looks like a pretty steep drop off, but that's only 6 million. Now, on one hand, 6 billion, I should say. Now, on one hand, that's not a large amount on, in the grand scheme of things, I suppose. But on the other hand, that means that they've lost almost a third of their operating income. So what is going on here, even though their revenue keeps going up and up? And so I just did some searching here, and I noticed that in the 2015 fiscal year where we saw that drop off, well, they increased their wages since then twice. And so now their minimum wage, as per this article, was $10 per hour. So that's going to have obviously a major effect. And you can see how much the wages of employees affect their operating income. And here we have a more recent article where they're willing to pay $15 an hour at many other rivals like Amazon, Best Buy, Target. And when we look at Market Watch here, they mention that Walmart now is also going to be paying $15 an hour. However, now remember that $10 an hour we saw before was what Walmart used to pay. Now they're at $15, except they're still keeping their starting wages for everyone at $11 an hour, first of all. So that's up from the 10, okay. And this is only going to pretty much affect maybe half of the employees. And so what's going on here? Well, they mention people who have been working at Walmart for 11 years and they're still only making $11.85. Well, they're cashiers. Now, maybe there's other people as well. How do I look at this? Well, the way I look at this is pretty simple. There are much lower level jobs at Walmart that they feel they can automate, that they feel that they can replace people pretty easily with, let's say, $11.85. So people are not being paid for how long they're working at Walmart. And sadly, this, I assume, woman is really being left in the cold here. Now, Walmart praises itself, I suppose. What would they otherwise do? They're not going to hate on themselves for trying to offer programs to move people up into the company. And obviously, as you move up, you can be paid more because you're delivering a lot more value. My guess is if Walmart really moved to the $15 an hour for everyone, this would seriously affect their income. And I actually am a little suspicious. I think as much as half of their employees are moving to this $15 an hour income, I have a feeling like a lot of them already earned more than $15 an hour. Call me skeptical. And this is just kind of a ploy they're using to quiet down people who are angry at them. And I'm guessing that the people who are paid, like this woman, $11.85, right? There's a reason why. Sadly, because they can be replaced, they can be automated away. And I think that's what Walmart's going to do. They're going to automate these employees away. And maybe the few that stay to watch over the machines, maybe they'll get paid a little bit more per hour. And, like it or hate it, that's sadly what I think Walmart's doing. And maybe people hate it enough that if Walmart is forced to pay everyone $15 an hour before they can automate these employees away, well, Walmart will take a serious hit. So you have to pay attention to politics. Are there going to be $15 minimum wage laws passed, federally? That would make a serious dent, I think anyway, into what's happening in Walmart. Now, in terms of their consolidated statements for their income statements, you see the currency translation other went from $1 billion plus in 2020 to now losing $500 million. So currency is obviously making a big impact on what's happening with their income. Now, of course, you can see this even bigger change when we look at the 9 months. It went from negative 2.5 to positive 2.5. That's a pretty big swing. Nevertheless, at the end of the day, you can see at the comprehensive income attributable to Walmart at the end of the day for the 9 months was pretty steady at $13 billion. And for the 3 months, it went from $6 billion to $3 billion. And maybe that's because primarily a $2 billion swing in currency translation. So something to keep in mind, when you're looking at these Walmart expansions into other countries. On one hand, it's going to help you, as inflation happens, they're, more diversified. On the other hand, you're going to have these currency issues as well. So something to keep an eye on. I personally don't mind. But because if they're buying in those locales, right, the currency translation doesn't really matter. Okay, now their total current assets went from $90 billion to $82 billion, $83 billion. Okay, we'll talk about that. But nevertheless, that's pretty large. And their total assets are $250 billion pretty much. Went down primarily because of those current assets, but still very large. Now, the inventories, I thought this was pretty interesting, went from $45 billion to $57 billion. So clearly a huge ramp up in inventories. And now this I thought was interesting. Prepaid expenses and other went from $20 billion to $2 billion. What's going on here? So I tried to find a chart. And that was just some, I suppose, I mean, it's not bad data. We're seeing the data right here that, last year it was at, $22 billion. So I don't know exactly why. Maybe that was part of their inventory ramp up, I suppose. That's the way I'm just going to look at it. But that was a huge spike in their prepaid expenses, whatever those were. But that was temporary, so I'm going to ignore it for now, as far as I can tell. I don't mention anything like that. Now, the total current liabilities, $87 billion, so that's pretty close to their total current assets. So nothing that scares me too much there. And their deferred income taxes, obviously there's going to be some big changes here as they change with their income and their loss on extinguishment of debt. We mentioned that, not a big deal. Their inventories, big change there, $4 billion more going towards from the cash to because we're looking at cash flows, that there's an extra $4 billion coming out of cash into inventories. That's why there's a negative here, because we're reducing the cash flow, because as much as that's an increase in the asset, of course, you have to use cash to get it. Now, in proceeds from disposal of certain operations, right, $7.9 billion. So that's going to be pretty interesting. It sounds good, but I'm not a big fan personally. Proceeds from issuance of long debts, $7 billion. In terms of repayments of long debt, $13 billion versus the $4 billion before. My guess is that's kind of them rolling over the debt, and premiums paid for extinguishing the debt early, $2.3 billion, right? So nothing too surprising over here. Now, the purchase of company stock, this was pretty surprising to me. Previously, it was $1.1 billion. Now it's $7.3 billion spent on repurchasing stock. That is a huge amount, in my opinion, and especially with Walmart stock flying so high, that's a little bit surprising to me. Now, they mentioned that they sold in the UK their Asda affiliate for $9.6 billion, and in Japan for $1.2 billion. Seiyu, assuming I'm pronouncing that right. So interesting, they're really exiting these other markets. I'm not a big personal fan of that. They obviously know what they're doing. I would kind of like to see Walmart growing itself, expanding more, doing more. But nevertheless, this is what they've chosen to do. And they're backing out of some of these markets. Now, maybe that's a very smart thing as they reorient it or as they try other markets. I'm not saying it's a bad thing. I just would love to see these other areas not only do well and be able to be sold for a lot of money, but continue to grow them. That's what I would personally like when I'm looking at a company. But if they're going to take this money, invest it other places, not hopefully just repurchase stock, that's also good. Now, in terms of some litigation issues, they seem to be involved in this opioid issue and prescribing or offering, and they're going to have to figure that out. Just something to throw in here. If you know more about this, please, once again, leave a comment if you think it's going to be a major issue. Obviously, Walmart's being everywhere, and the fact that, people are going to be sued for either loss of life or whatever it might be, could be pretty serious, but I know very little about that, sadly. Okay, so in terms of net sales, you can see there's a huge increase in the US, another $8 billion, and an increase in Sam's Club, another $3 billion. Internationally, though, Walmart has done a little bit worse. There's a drop in $6 billion. I'm not entirely sure. Is that because they've sold Asda, Seiyu, these other places, and so they're not recognizing the net sales? I didn't see that mentioned exactly, or maybe I forgot. I'm not sure. I apologize. But that might be a contributing factor. So it would be, pertinent to really pay attention to this number. Is the international side of Walmart doing worse and worse, or is this just kind of a temporary blip because of that sale? Now, when we look at operating income, we can see over here that the U.S. is obviously doing a lot more. They're doing 0.05% of their sales, so $5 billion of operating income. And then as you go down, Walmart International, 0.037, and Sam's Club, even a little bit worse, 0.025. Now, maybe those can be improved, and maybe that's why they sold some of the international stuff, because it's not performing as well as Walmart US. I'm not entirely sure. It's hard to tell those types of things, but something to keep note of. That obviously the US side of Walmart is doing the best, and so if that side gets hurt, it's going to affect the operating income a lot more than the international side. So something that I found interesting. Another interesting thing here is they went from 10.3 billion to 11.1 billion in e-commerce. So they're growing their e-commerce. I thought that was pretty interesting. Also, what I found fascinating is that grocery makes up an enormous amount of Walmart sales. So 50 billion to 55 billion, big change. But that's a huge change, huge number difference between, it's almost half general merchandise and health and wellness. I assume that includes shampoo, but it also includes, I assume, the pharmacies, about 11 billion. So just something to keep in mind, these different sectors, how you see them growing, and especially with inflation concerns, inflation will really hit groceries, but that's also something, obviously Walmart doesn't want to pass that on, but it's something easily passed on. And so as inflation hits, they have to raise their prices as well, just like everyone else, because groceries tend to be these types of things that will grow with an inflation. So they're, in my opinion, not an expert on inflation. Once again, this is education purposes only, but it seems like Walmart might be a little bit protected from inflation. Of course, bad inflation will affect everyone badly, that's for sure. It's just it might affect a technology company a lot more than, let's say, Walmart. United Kingdom here, because of their sales, you can see that they've cut that off. That's why I was saying before, maybe that's the reason for the drop in $7 billion of income, or whatever it was. Maybe it was sales, I don't remember now. Nevertheless, you can see Mexico and Central America are their largest international sales. I thought that was fascinating. So it's important to keep an eye on that area of the world. And Canada following, now it's second, but it was third. And China, very far, much lower there. So if there are some issues, political issues, now it is still $3 billion, nothing to sneeze at. But if that is severed, it won't make a serious issue for Walmart, except for maybe import and export, and maybe that will be a bigger effect Now, they do mention that when they are going to use capital, they're going to focus on supply chain, customer-facing initiatives, technology and store remodels, and much less to store and club openings. Now, why is that important? Like we said, automating, getting the supply chain working properly, maybe even automating that. These are major issues. They have to put capital, and I'm a little bit... I wish that, if it was me running the company, what can I say? Obviously, I would never do that, and I'd probably do much worse than them. But when I'm looking at this, they've gone from 3.3 to 4.4. That's great. They're increasing how much they're focusing on this automation, technology, supply chain side of things. But I would love for them to invest way more, right? Instead of repurchasing stock, the ability to push, how much you can automate, how much you can grow, how much you can do all of these things. And you don't even necessarily have to automate it. You could just expand it, right? But nevertheless, obviously, I suppose they know what they're doing, and they nevertheless are increasing. Now, it doesn't mean they won't also increase new store and club openings, but much less so is my guess. Me personally, I would prefer focusing much more on these technology side of things, because that can really, really grow the bottom line, right? That to me is important, right? Because they're doing tons of sales, tons of revenue. If you increase that operating income, that to me would be even more impressive, because there's a huge percentage that you can grow there. Now, they benefited strong from U.S. customer spending and some inflation, right? So this is what we were talking about before. The inflation will help their revenue numbers go up, and even their income numbers go up. The question is, too much inflation, that might be a problem for everyone. Now, they do mention that they have higher supply chain costs and fuel mix, so that could go away. That could bring up their income, which is nice. And also, they had, over the year, I suppose, or 9 months, I should say, they had related costs of $2 billion due to all the craziness happening from the virus. And so that could also go away. Nevertheless, that was offset. So although they didn't have those $2 billion, and so that could go away, that was offset by increased wage investments, primarily in the Walmart US segment. And I'm guessing that has to do with them increasing those wages. So you're seeing that, wow, there's $2 billion coming off of, the income, while that's going into these wage increases. Well, so that means how much of the half of the employees who got that $15, how much of that was increased, right? If that was imagine the other half who are below that $15. If you had to increase that, it would certainly be presumably $2 billion worth, and maybe much, much more. So something to keep in mind on how important wages are for Walmart. That's the way I look at this. And that's really sad, because obviously people should be paid a lot more. But so they have to figure that out. Now, they increased their inventory purchases to support strong sales, so they're not just spending money. This is, to me, a great sign of things. And so they used a lot more cash and also payment of wages, right? That's where the money's going. Now, in terms of their risk factors, they mention the fact that, yes, market levels of wages. So if that all goes up, that will be a serious issue. Inflation or deflation, right? So in certain areas, that'll be good, that'll be bad, right? It's hard to tell, even from the way they're phrasing it. I would love more information, I suppose. And consumer confidence, credit availability, spending levels, disposable income, all of these things you have to keep an eye on when you're looking at Walmart. Now, I think Walmart's a little bit more insulated because people look at them as a cost-effective solution, right? So if you don't have a lot of money, where are you going to go? You might have to go to Walmart. So, but nevertheless, obviously, if people are spending less, it's going to affect Walmart too. And drug insurance programs, which I thought was interesting, how those are relayed and available might change quite a bit. Hopefully you'll like, comment, and subscribe, and let me know if this is actually something good and useful. Obviously, you can see Walmart is growing seriously and steadily, and it looks like an amazing company. They're exiting some markets, which makes me a little bit nervous. Obviously, maybe if you know more about that, let us know. Maybe they're just, turning around those areas, and so they're just going to sell them now that they're doing well, and they don't see themselves growing them anymore. I'm not entirely certain. That'll have to take some more research. Nevertheless, I think it is a great company. The biggest problem I see for Walmart is this wage issue. And so the question is going to me, as you keep your eye out on, different people and different Walmarts when you go to them, are they automating them more and more? Are they getting rid of employees, or have the ability to get rid of employees? Because at the end of the day, they want employees, they want to pay people, I'm sure. But as these wages go up and as people want higher wages, right, if they can't afford them, they can't afford them, and they'll have to cut the employees, or get those employees providing more value to Walmart in a different way. in theory, that's what you really want. You want young people who don't need a lot of money living at their parents' house, staffing a lot of these $11 jobs. And then the higher paid jobs are for people who, have kids, who have other expenses, who need more money. I totally get that. So that is a serious issue as far as I can tell with Walmart. They're obviously trying to deal with this wage issue and look good and not trying to fight it, especially when their rivals are kind of following the general trend of paying $15 an hour minimum wage. So I would say that is the key thing. And we'll have to look a little bit more at the Walmart stock price and where things are going and what's happening with them. To me, like I said, I think it's a great company. It's almost a company I'd want to invest. They seem a little bit expensive to me right now, and we'll have to look at what the insiders are doing, what's happening everywhere else. But please let me know what you think. Are you buying? Are you liking the company? Do you think it's going to go higher, lower? Where's your kind of perspective in all of this? Thanks so much for watching.